Alright, what's up everybody? This is Tanner from mytradingschool.com and the School of Trading. And what this video is an example of one of the elite members only videos that we put in our video library for our elite members. I wanted to put it out really for two reasons. One, to continue to add educational content to this free YouTube channel to help those of you who are out there trying to learn to trade to be able to expand your trading tools chest. And two, to give those of you who are considering joining our elite plan an example of some of the videos we put in our video lessons library. We like to add at least one, preferably 2 to 3 videos to that library a week. It's an ever-growing video area, and it just continues to build on what you can learn in our trading course to help you be able to master specific concepts. So if you're interested in that, visit mytradingschool.com. You can sign up there. We have an elite plan. You'll see it at the bottom. There's a bunch of different options and a bunch of different discounts available. Again, if you haven't already, make sure to subscribe to our YouTube channel. If you have any questions at all about our elite plan or anything in this video, shoot me an email, tannerstrading@gmail.com, or you can post them in the comments and I'll reply to you as soon as possible. So again, I hope you enjoy this video. It's going over the cup and handle formation and how to trade it. All right, what's up everybody? This is the elite members only video going over the cup and handle formation and how to trade it. Now the cup and handle formation is one of my favorite breakout plays. It's kind of, I don't know if underappreciated is the right word, but a lot of individuals don't use it because there's not scanners technically that can find it. But what you're going to see here in my, well, at least free scanners, but what you're going to see in this video is it's a very simple formation. It has clearly defined entry points, stop losses, and there are ways to use our free Finviz scanner to find the cup and handle formation. So we're going to jump right into this video here. First and foremost, what is a cup and handle? So by definition, a cup and handle formation is a pattern which forms on a chart resembling a cup with a handle. The cup is a U shape and the handle follows the cup with a slight drift downward most of the time. Okay? The cup is formed as the price retraces from a run, then reverses topside before stalling out at or near the previous run's high and reverses downward to form the handle. Generally, the right side of the pattern sees lower volume. The cup and handle formation is a bullish continuation pattern to the top side. Now that can seem confusing. It's all right. We're going to use some visual examples, which will make it a lot easier for you. So we have one here, a visual example. You see this chart price here. What do we see? We see a run. Then we see this high formed here, a retracement, move sideways, a second run that goes up right near that high but is unable to break above it, and it pulls downward. So we have here is we have the cup, you see this big U shape, and then we have this downward pull back here, which is the handle. Very simple. You have essentially a double top, roughly, doesn't have to be exact price, so it's unable to break above that, retraces, reverses topside. Now, the handle, if it were to retrace all the way down to this low again, that's not the handle. Generally, a cup and handle is still intact so long the handle doesn't exceed half of the cup. Okay, if this were to break all the way down to here, that would not be a cup and handle. Let's look at some other examples. You see here, runs, forms a high. What does it do? Pulls back, reverses topside, goes up, retests that high, unable to break it, pulls back. So what do we have? We have the cup, and then we have the handle. Okay? A cup and a handle. Let's look at one more. Same thing, price moves up, sets a high, reverses. We see the cup, goes back up, gets near that high, unable to break it, reverses back downwards, and we see the handle. So you have the cup and the handle. Last one. Price runs, sets a high, reverses downward, little consolidation, runs again, breaks that high but essentially stalls out right near it, reverses downward. So we have the cup here, and we have the handle that formed here. So you see the cup, you see the handle, and what you can see afterwards is a breakout of this handle can lead to significant run from 6 all the way up to 8 for this chart. All right, so how to trade the cup and handle. The first thing we're going to focus on is entry points. It's very important that we get the best entry possible as we talk about with trades, which can be one of the most difficult things to do, but with practice, it comes a little easier. So as the price action reverses from the minor pullback, which is the handle, and breaks closes above the descending resistance trend line. All right, you want to see it pull back and form the handle and then break above the descending resistance trend line. One would enter for a long position long. Okay, that doesn't mean if it just pops right above it you enter. No, generally, as a rule of thumb, most people will wait as the day gets ready to close and it appears as if the candle is going to close above the resistance trend line. Okay, we'll use some visual examples to illustrate this point. This entry scenario works if we have a strong downward drifting handle, like we looked in those examples. It's strongly drifting downward. If we have more of a sideways moving handle, we would enter on the break of the cup's high point, which I'll show you here in a minute. Unlike a bottom reversal play, we do not rely on 3 or 4 indicators to signal a buy, though if they are, your chances of success are increased as usual. This is more similar to breakout plays such as the ascending triangle. Many times the indicators are already high. You are looking for momentum after the breakout. In fact, speaking of ascending triangles, a lot of times you can have both a cup and handle forming and an ascending triangle. So let's look at some examples. All right, we see here, we saw the run, set a high, which this 1 signifies, pulls back, pulls back, pulls back, reruns, retests that high, fails, pulls back. So what do we have? We have the cup formed here. We have the handle here. There's 2 areas we're going to pay attention to. We saw a sharp downward drift. The entry with this area would be on the break and close above the descending resistance line. So we have here a descending resistance line. It breaks above, closes. This 1 here would have been a solid entry point. The next day it does pull back, but it holds above that line, and we see a major reversal all the way from this 134 all the way up here. Now, what I mentioned, you know what, let me use some of the other pictures to illustrate that. Same thing here. We see the run, sets a high, comes back, forms the cup, retests that high, double top forms, unable to break it. What does it do? Forms a handle, okay? Forms the handle here, breaks above the top descending resistance line, breaks strongly above it, closes for a solid entry long, and we see a move from the 40 all the way up to 46. Okay, so you'd enter on a strong break above and close that descending resistance line. Okay, cup, handle, entry point on the break above the descending resistance line. Let's use another one here. We see the price. Not all the time do we see, for example, like we've seen in the last ones where it's a run, sets a high, and then comes down. Sometimes you can have it like this, where it does like this, reverses, and then it fails to break. So you'd notice you have a high here and roughly a high over here. Okay, so it forms the cup. We see the pullback, a sharp pullback with this one. So we have a really sharp descending line, breaks out, entry point, closes above it. We've seen a good move all the way from 29 to 33. Okay, so you want a long entry on a break above the handle trend line, that descending resistance line. Let's use this example here. There's multiple breakout points to be aware of. First and foremost, we have a very shallow cup here. It's still a cup and handle though. Shallow cup forms. We have the high here, goes up, unable to break, pulls back, breaks above that descending resistance line for an entry here at B. We see the run top side, and it breaks above the double top here. So there's 2 key areas to pay attention to. First and foremost, the break above the descending resistance line, which signifies your entry, and the break above the double top, which gives it more of potential breakout volume, which we see with this one. Huge volume day and a major run from 450 all the way up to 625. Okay, so 2 key breaks above the descending resistance line and above the double top high. Let's use this example here. We see the cup, strong cup forms here. Price pulls back, but it doesn't pull back a whole lot. So this is the second way you can trade this. If you don't see a nice major pullback in a clearly defined downtrend, here's the second way you could trade this if it doesn't pull back a lot. You could merely buy it on the breakout above the double top. Since this one pulled back sharp but kind of reversed right away, you could have bought it here as we broke above that double top for a play topside. Generally, however, we want to see a nice downward move, a clearly defined descending trend line, and a buy on a break above that descending trend line. So let's focus on the stop loss now. Sometimes using a basic 10% stop loss in a cup and handle formation is not the best route, okay? Instead, we are going to use purely chart stops at first, okay? We're going to focus purely on the chart. Sometimes it could be 10%, sometimes it could be 5%, sometimes it could be 15%, okay? A generic stop loss can be placed right below the low of the support trend line of the handle, okay? So the low of the support trend line of the handle. If price breaks below that, the chances of the formation working are significantly decreased. Oftentimes, that point can be over 10% from your entry, as I just mentioned. If it is, as usual, make sure to enter with enough capital to where you could handle such a loss. Okay, so don't go in, if that happens to be 15% below your entry, go in with enough capital to where you could stomach a potential 15% loss. Basic rule of thumb. Okay, let's use some visual examples. All right, we see the high formed here. We have the cup, goes up, retests that high, fails to break it. We see the cup form, starts to pull back. Handle forms, we have a solid descending resistance line. Breaks above, we would have entered here in this candle here. Where would our stop have been? This is the descending support line. We would put it roughly right below the low of that descending support line. Okay, some people could use, for example, this wick here at this candle. That's the low price point of that descending support line. So that would be your solid stop. Breaks below that, you exit the trade. All right, very, very simple. Let's use another example. We have the cup formed here. We have the two highs. Handle forms. See the handle here. Breaks out, we enter the trade. We put our stop right below the price low of the handle, which is here. We can put a stop roughly a percent or so below that. So if it pulls back, hits that, we exit the trade as a stop loss. All right, let's work on the profit target. Stop loss is simple, very simple. You put it right below the support line and the lowest price of that handle. Okay, a percent or so below that. So the cup and handle formation profit target. So as usual, anytime you can secure a solid 10% win, I always recommend you take it. Okay, anytime we can get 10%, lock it in. All right. With the cup and handle formation, it's hard to pinpoint exactly where price will reverse from the breakout run. But as usual, we need to identify areas of resistance above our cup's high, which is the double top that I mentioned, as potential reversal points. Generically, this is what some will do. Some will recommend taking the distance from the cup low, okay, the cup price low, and the breakout point entry. So you take the distance between that price-wise, and you use that as a potential profit target. So if it's 30 cents between those, you would add 30 cents onto your entry and use that as a profit target. This, however, it can be dangerous when we have really deep cups. Okay, if you have a shallow cup, that's not that big of a deal. But if you have a really deep cup that has, $2, $3, using that as a profit target can be a dangerous move. So for profit targets, we're going to take each stock on a chart-by-chart basis, as usual. We're going to recognize resistance areas above our double top, and we're going to take it on a chart-by-chart basis. All right, so cup and handle formation, how to find them. This is the key thing. A lot of times, though, by just understanding the pattern, you'll start to spot them in basic charts that you already have on your watch list. That's why I wanted to teach you this pattern. There isn't much scanning software out there free-wise that will specifically search for a cup and handle formation for you. We can, however, utilize Finviz.com and search for characteristics of a cup and handle, such as a double top. So let's go ahead and do that and see what we can find. Let's go to Finviz real quick. Finviz.com. As usual, what are we going to do? We're going to go to Screener. We'll just do a basic scan here. We'll go to Price. I'll do under 20 for the example purposes. Generally, we're looking for under 10 though. Current volume, we'll do over 300,000. Then we're going to go to Technical. Pattern. Okay, go ahead and hit Pattern. And you can scroll down to where it says Double Top. Hit that. it'll load for you. Then you hit charts. It says charts here, so make it easier for you to quickly scroll through. And we have a few examples here of potential cup and handle breakouts, and also cup and handles that merely did not break out. And we'll go over a little bit of both of them. Let's scroll through here real quickly. Okay. Let's look at BAA real quick. We had this minor cup and handle here. We see the run, sets a high at 40, pulls back, retests roughly 40, 38.5, starts to form a handle, but what does it do? Pulls all the way back down towards that 30. Again, we don't want the handle to exceed half the size of this cup. So this is more of a W breakout here. This could have been a good pickup in the 27 to 30 range as a bottom reversal play off that support, but it is not a cup and handle because the price exceeded half the size of the handle. So let's look at some more here. Let's try to find a good example. Let's look at CRIS. CRIS, a very shallow cup and handle. We see the price go up, test 350. What does it do? Pulls back, starts to move sideways, reverse up, goes to 365. Again, it doesn't have to be an exact 350 price. They're roughly within, near each other. And then what does it do? Starts to drift sideways and pull back. So we have the handle forming here, okay? And we have the cup formed here. So this could be a good potential play on a breakout above the descending resistance line or a breakout above that 365. You'll also notice something. If you remember, I mentioned cup and handles oftentimes can be also ascending triangles. What do we see here? Topside resistance, horizontal resistance, ascending support line. Okay? So even though we have a cup, let me remove these real quick. So we have the cup here, sideways movement, moves up. We have the handle forming here. Okay? We also have, as I just pointed out, an ascending support line. So we have a cup and handle and an ascending triangle. So with this one, in my opinion, this is why it's important to take things chart by chart. Since we didn't see a major pullback price-wise, in my opinion, it'd be wiser to treat this one as an ascending triangle breakout and purchase it as we break that 365. Okay, if we would have seen a nice deep cup and a good candle, and we wouldn't have been so close to this resistance, it would have been smart to treat it as a cup and handle formation and purchase above the breakout of the resistance trend line. So again, keep that in mind. A lot of cup and handles will form ascending triangles as well. Look for how shallow they are, and you may be wiser to treat it as an ascending triangle breakout and buy on this second breakout here than to buy on the resistance breakout. So that's CRIS. Let's look for another one here. Let's try to find a good one. Let's go to page. Actually, let's use SPF. So SPF. Let that load real quick. All right, let's go to annotate. So what do we see first and foremost? We see the long run, sets a high here. We'll label that high, 919. What does it do? Pulls back, slight sideways movement, reverses topside. Okay, so it's retest that 919 high. And what do we have forming right now? We have the handle forming right now. Okay, we're forming the handle portion of it. We'd like to see it pull back a little more. So the buy would be on the breakout above that top handle. Now again, this can seem kind of complicated. Remember, as I said before, let's say this reversed right now. We wouldn't necessarily want to buy on a breakout right above this resistance here because there's a resistance so close to it. So what we would do is focus on that second breakout point, which is this 918 and 919, and purchase on the break above 919. Okay, so if you see a good half of a pullback on the resistance here, let's say this goes up 918, pulls back, comes all the way down to 860 range. Nice solid downward drift, breaks above. Simple, you buy on the breakout of the resistance, play to the top side. If you see a small move like this or even a sideways move, look to buy on the breakout above 919. Now, I hope that didn't confuse you too much. If it did, go ahead and email me. We'll send charts back and forth. I'll kind of show you more of what I'm talking about. Basically, all it is you don't want to put yourself in a situation where you have two resistances in a row right after you. You'd like to see this handle come down about 50% of the cup and then get it on the reversal so you have a good amount of room between you and that next resistance. As I mentioned, if it's real close like this, simply look to buy it on the breakout of that second resistance area of 919. All right, so simple and effective pattern, simple and effective formation, really easy to draw. As usual, I'm going to start to throw this one into the watch list when it becomes available. Okay, we're going to start to look to spot them on our plays to use as a breakout play. So we move from we've been focusing on channels and bottom resistance supports. We have to adapt though as the market adapts to us. Again, this is summertime right now. This is a perfect time to spend trying to learn and expand your education level because summer tends to slow up volume-wise and have more, a little more dead as college students go home, people go on vacation, whatever it is. So this is the perfect time to do some education just like this, cup and handle formation. If you struggled with this at all or have any questions, do not hesitate to email me. This could be one that you just need a little more practice. We can send some charts back and forth and go over them more in depth. Let's look here, the last few slides. Okay, so in conclusion, let me open this up so you can see it better. If it'll load for me. All right, I got to scroll all the way through it now. Let's go all the way here. There was one thing I wanted to mention regarding your stop loss. We talk about in trades a lot of times raising your stop loss, and I don't need to go all the way to the last slide, but that's what I mentioned. Okay, raising your stop loss can protect your downside risk. So what you could do, for example, we have this cup formed here. We have the handle, decent downward drift, so we could buy on this breakout here. We enter the trade. Our stop loss is where? Right below the low of that handle, so right down here. Moves up. We get right near that second breakout point. What do? We break out above it, and then we move higher. Now, this is where you could raise your stop loss. What I personally like to do, as the price gets 3 to 4%, 3, 4, 5% above that breakout, I raise my stop loss to that breakout point. Okay, 3 to 5% above, I raise my stop loss to that breakout point. And I keep it within 5% of the price as the stock moves. Okay, generally when I say to take your 10% is if you're in a stock and it's up 10% and the day's about to close, exit the trade because you don't know what can happen overnight. If you jump in a stock though, if you would have entered this one here, seen this run, breaks out, goes 5% above, you raise your stop loss here, and you're in this day, and you see this huge run occurring, you don't need to exit when you're 10% above right away. Simply raise your stop loss within 5%. You're in the current day. You can react to the price as it reacts. It's not an overnight situation where it could gap down. So try to squeeze everything you can out of it. That's when we get our 10, 15, 20, 30% wins, when we let them run on days like this. Okay, so continue. The point of a stop loss, okay, a trailing stop loss, is to raise it as the price increases, but you don't decrease it as the price decreases. All right, so if it breaks out, goes up 5% above that breakout point, I raise my stop loss to that breakout point, moves a little further, I keep it within 5% of the price as it moves. Moves further, keep it within 5%. Gets all the way up to 550, let's say it started reverse. Do I reverse my stop loss down? No, I hold it. So if it goes down and it exits me out, that's perfectly fine because I got profit. Okay, so that's a little technique for you guys. A lot of times I'm afraid you might think when I say take 10%, that as soon as you hit that point in the day, you just exit, which it's fine if you do, especially if there's chart resistance ahead. But if you have a clear chart like we have on this one, don't be afraid to let it run throughout the day, raise your stop loss with it, and maximize your profit. When you want to exit is before the day closes. You don't want to put yourself in a situation where all of a sudden you have a 20% win, day closes, you think you raise your stop loss, and it gaps down below your stop loss. All right, so use a trailing stop for your trades, especially intraday, and exit a trade where you have over 10% or the chart turns against you. So if you have any questions at all about the cup and handle formation, shoot me an email, tannerstrading@gmail.com. I hope this video helped you learn a little more techniques for your trading, things you can implement. Don't just start trading this right away. Paper trade it for a while. Do some scanning, do some practicing. If you want to, find some charts, label them if you think they're a cup and handle. Go on to annotate on stock charts, label them, email them to me, and I'll let you know how accurate you are with your description of the cup and handle and if it is a cup and handle play. We can practice back and forth. A lot of you do that. That's fantastic. More of you, feel free to do that. A lot of people will do it with support and resistance. You can do this with the cup and handle. Shoot me the annotated chart. I'll let you know if it is a cup and handle. Or let's say you can't annotate, you use the free stock charts version, you can't save the annotation. Just send me the ticker and say, hey, I think this is a cup and handle. Am I right? Am I wrong? And I'll send you back an annotated chart and let you know. All right, so I hope you enjoyed this video and have a great day.